some of the other ways that we approach it in the US, the idea of having a very centralized system without the expectation or at least the space for decentralized protocols. I'm the former chair of the Maker DAO's Maker Ecosystem Growth Foundation. And one of the most important things, and Mimi, you talked about it earlier as well, the slow but steady iteration, but also just recognizing that the very point from Satoshi's white paper back in 2009 was the idea of a decentralized process. And so where does decentralization fit in?
We are highly heterogeneous. Most of the African countries don't know what we are about because some have advanced in regulation, others too are partial, and some of them totally blackout. They don't want to hear the name digital access. And it is not their making, because when you look at the African perspective currently, I think there are only few countries that have advanced in this digital asset conversation, which is South Africa. They have
Actually, I'm not going to talk about crypto. I'm going to focus on digital technologies in general within the tourism and hospitality space. And payments occupy a very important place when it comes to tourism. For instance, in Ghana, for 2024, we raked in about $4.8 billion from tourism alone. Africa only accounts for just 5% of global tourist arrivals. And if we have the likes of South Africa, the Northern African countries, and the like, then your guess is as good as mine. Ghana, it appears there is more room for improvement. And so I'm going to talk about digital transformation within the industry in general. And the fact remains that the tourism industry was one of the first to have adopted digital technologies. For instance, in the 1970s, there was talk about computer reservation systems. And that was basically for the airlines. It enabled travel agencies to know the schedule, the flight schedules of the airlines. But then it didn't allow for payments and other more complicated functions. So in the 1980s, the computer reservation system was upgraded to global distribution system, the likes of Amadeus and Galileo, which we are all using today, which allowed the travel and tour agencies to now book and make reservations. And the 1990s, with the development of the internet, online booking became the norm. So now you don't necessarily have to rely on travel agencies to make a booking. As an individual, when you are traveling, you can go online and buy your own ticket. So the issue of payment came in. Now in the 2000s, there was the emergence of Web 2. And Web 2 allowed for user-generated content. And it was more flexible. So you were not just flipping through some static pages on the internet, but you could actually populate data on the internet. So e-commerce came into being, and then the fintechs now began, and then the global wallets, they now began thinking about how to make payments more seamless. So in the 2010s, with the development of mobile technology, social media, and other smart technologies, a number of online travel agencies emerged, the OTAs, the likes of Travelocity, Priceline, and the rest. And it became even cheaper for people to book their airlines and even hotel accommodation, even attraction sites online. In the 2020s, we all know the lessons that we learned from COVID-19, the need for contactless technology. As a result, there were a lot of development in that area. Emerging technology, AI, chatbots, and the rest came into being. And now it is becoming even more easier to book or make reservations online. So this is how technology generally has evolved in the industry. So in the past, if you were a traveler, you probably look for some what we call the travel guides. You may look for a travel guide in order to choose a destination. And then you start thinking about, how do I get a visa? I have to book an appointment, go and queue at the embassy, and so on and so forth. Then you start thinking about payments. How do I make payments? I have to buy it from a travel agency. Now, we are saying that all these things are a thing of the past. You don't have to travel with large amounts of money, because the risk and also the fact that when you get to the destination, sometimes there is exchange loss, changing from one currency to the other. So the old model is now giving way to a new model. There is disintermediation. The travel agencies, the tour operators are no longer needed by most people. So they will plan their own trip book their own flights, buy their own tickets, and so platform that will make the whole experience seamless. And so there has been a number of developments in the field. And as you can see from the numbers, in 2024, we had about 1.29 million arrivals. At the same time, mobile money subscription is also going up. In fact, the popular form of payment domestically is mobile money. And registration of mobile money jumped from about 39 million in 2020 to 66 million in 2024. And in Africa, we are talking about trillions of dollars of transactions. For us to be able to situate digital technologies within the whole travel experience, we need to understand that there are three phases in the travel experience. The pre-travel, where the traveler has to make a decision by searching for information, choosing the destination, and then making appropriate bookings and reservations. Then, during the travel itself, there's a lot of communication. You are communicating with service providers. You are communicating with your people back home. You are interacting with other people. You need more information to compare prices and so on and so forth. Then there is navigation. You need to find your way around. For instance, when we're coming here, we had to use Google Maps. So there is the issue of navigation. And then real-time sharing. You want to share your experiences with your friends and your family back home. So how does technology help you in facilitating all these things? Then after the travel, there is also experience sharing. You want to upload your pictures. You want to go online and write reviews. You want to engage with service providers. They want to find out, give us some feedback. So this will translate into, or this has translated into the provision of certain digital technologies to make the whole experience seamless. We can talk about social media apps. We can talk about websites that provide travel information and also allow for bookings and reservations. The online travel agencies are facilitating this. Also, even some embassies are now issuing electronic visas, so you can also pay online as you apply for your visa. In the course of the travel, you are also making payment. Now, QR payment is also becoming popular. But in Africa, you realize that most of our service providers are small to medium scale enterprises, and they may not have that technology to facilitate that. And in some instances, due to fluctuations in the internet, they are not able to achieve that. So fintechs like PayPal also enable quicker settlement. For instance, you are changing from dollars to cedis. They have made it easier. Technology generally enhances the entire visitor experience, and I'll talk more about that. During the post-travel, again, you want to get on social media and share pictures and your travel experience. You want to do a review. And the review serves as a marketing tool for the service providers. Because chances are that when I'm traveling, I'll first go online and then look at how people have reviewed the places that I want to go to or the hotel that I want to lodge in. So that becomes a marketing tool, the likes of TripAdvisor. Destinations and service providers also sometimes even send requests for people to do a review on their experiences. So there are a number of payment platforms across Africa. I have singled out M-Pesa, which is very popular in Kenya, and then mobile money, our own Momo, which a lot has already been said about it, so I'm not going to belabor the point. But aside that, there are also third-party fintechs, the likes of Flutterwave, Paystack, PalmPay, and I'm sure in Ghana there are other examples. This is an area that offers also opportunity for our youth, especially developing platforms that could be used by our small to medium scale enterprises. And I think the point has been made that we should have homegrown solutions. We should develop things that will suit our context. And so the challenge has been thrown to us. Let's develop platforms that will allow tourists to make such payments, especially when they visit the rural areas and they don't want to, or they cannot issue cash or check. How can they pay using those platforms? So Ghana has also accelerated e-border and visa digitalization. Now, e-visas are becoming popular in Africa. You go to many African countries, Kenya, South Africa, they have all adopted it. There is still a long way to go, but it makes the travel easier. Because what information are you looking for that the applicant cannot upload and send to you online? So with e-visa, people have to apply online, upload all the documents that are required, and then those documents will be assessed. Then they are issued with an electronic visa. There is also another phenomenon, and that has to do with the electronic travel authorization. With electronic travel authorization, it is not a visa per se. You know, many African countries are relaxing their visa requirements. And some countries are totally, now there are some countries that you can, like Benin, they have relaxed, it's visa free, totally visa free for almost every country. And so the ETA is a way of ensuring that indeed you are a low risk person and therefore you don't necessarily require a visa to visit the destination. So e-visa and ETA provide numerous benefits, reducing barriers to entry and increasing accessibility. At a time when we are craving for more tourists to visit us, we should relax our visa requirement. I think this morning I had a discussion and it came up. The tour operators are complaining. It's difficult to get a visa to travel to Ghana. So some of these things can inure to the benefits of this country. It allows for faster application and decision times, and also increases arrivals and economic gains. And so, how do we enhance the visitor experience? There are a number of tools, digital technologies that can help us enhance the visitor experience. Honestly speaking, some of these cannot be deployed by our small to medium enterprises. However, they have become the norm, like the contactless technology, the use of chatbots like Alisa, Siri, and the rest. Then virtual reality, which actually takes you to the destination. You will not be there. Just put on the headgear, and then it takes you to that realm. And hotels especially are also relying on digital tools to fix appropriate prices for their rooms, for their inventory. So it helps them in a way to maximize their inventory and capacity. But there are also challenges, and I'm not going to belabor the issues because time is almost up. And I know some of these points have already been made. So we've talked about the digital divide, especially our rural folks. There is still an uneven playing field. They are at a disadvantage. There are also interoperability issues, and I'm happy to learn that the Bank of Ghana is working towards addressing those issues. Then the issue of trust, and then the cost. For some of the online travel agencies, their margins are quite ridiculous. Some are taking about 40% of the rates, and it creates a whole lot of issues. Of course, we can also talk about fraudsters and scammers. Then the issue of infrastructure reliability, power outages. Here we call it doomso, and also the fact that the internet itself fluctuates in most parts of this country. So let's adopt interoperable payment rails. Let's prioritize low bandwidth solutions, especially for our rural folks. let's develop apps that do not require a lot of bandwidth so that they can also get on board. Then train them. There should be training. The fintechs should come together and train our SMEs. Also, government should work towards addressing the issue of cost, the cost of data, which is an issue of grave concern. So for policymakers, let's also look at the issue of e-visa. For businesses, let's start by accepting QR wallets and also building it into WhatsApp platforms. For investors, let's support pilots that blend payment, training, storytelling, etc. It should be a complete package. So in effect, I'll say that digital transformation in Ghana and across Africa doesn't just digitalize old processes. It creates new market, opens travel for millions, and turns culture into a global, sellable, and inclusive experience. Thank you very much.
So we'll have Gabriel Sadoun, who is the head of business development at DigiShares, and Adam Blasek is head of product at DigiShares. So ladies and gentlemen, they are online and they are going to do the presentation to us for the next 30 minutes. So for the next 30 minutes, let's please pay attention to Gabriel and Adam. Thank you very much.
Hello, everyone. Can you hear me?
Loud and clear.
All right, so we can
Thank
hear
you.
you too. Maybe we may want to begin. Any of you that's ready, whether Gabriel or Adam, we can begin with you, and then all of us are with rapt attention here, listening to you.
Thank you. I'm just going to share my screen for a presentation. Hopefully you can see it. Let me know if not. But thank you. It's a pleasure for us to be here today. We represent DigiShares, which is a platform on which real estate developers, investment firms, and crowdfunding firms can tokenize their real estate assets, onboard and manage investors on the blockchain, and then provide trading infrastructure for those investors in the goal to broaden access and increase liquidity. So I'll start with a short presentation on real estate tokenization broadly.
All right, so
and
we
then
can see
I'll-
your presentation. I'm sure you can go ahead now. Thank you.
Sorry, it seems like there's a lag because I started about 30 seconds ago.
Yes. We
I'm
can
gonna-
now see the presentation.
Okay, yeah. So I'll start with the presentation, and then Adam will provide a live demonstration of our platform.
All right.
So if you think of a private market real estate transaction today, it is a very slow and complex process. You have to get third parties involved, such as an escrow banker, lawyers, oftentimes brokers, and the real estate sponsor themselves, which makes it very hard for people, especially who are abroad and want to invest in smaller amounts, to invest. Just taking a simple example to illustrate this, someone who wants to invest $10,000 in a project, maybe they'll be fine with the international bank wire fee of $40 for that initial investment. But as soon as you start looking at the monthly cash flows to be received, which in this case should be around $100, well, then that $40 fee becomes prohibitive. If you also look at the secondary market, it also is the cost of getting all of the third parties involved, and is as well prohibitive. So the private markets today, and especially for real estate, are rejecting a large portion of investors, and even for large investors who want to put in tens of millions of dollars, for example, if they wish to resell on a secondary market, they will have to accept what's called an illiquidity discount because of these inefficiencies. So just to illustrate what an illiquidity discount is, imagine you have two identical buildings. For the first one, the sponsor tells you, if you invest with me, you can resell your shares, you can exit whenever you'd like. The second building, the sponsor tells you, if you invest with me, your investment is going to be locked in for 5, 7, or 10 years. Well, if you choose the second investment, you will want a reduced price compared to the first one because your risk is higher. If you're locked in, your risk is higher. So what academics have found by analyzing public markets, where there are sometimes shares of the same company that are tradable and others not, they have found that this illiquidity discount is equal to 20% of net asset value, which is a massive amount. Going to the next slide. Why is it not working? Okay. So as I was mentioning, this system rejects many investors, including retail investors, so smaller investors, where we have a situation where retail investors own half of the world's wealth, but only 5% of illiquid alternative assets, of which real estate is the largest subcategory. And even for those larger investors that we mentioned before, if they invest in an illiquid asset class, they will have to accept the illiquidity risk of that discount to net asset value. And so they will reduce their exposure to the asset class because of that illiquidity discount and that liquidity risk. So it's a problem both for small investors, but also for the large ones as well. So we think the private real estate markets are ripe for democratization. And we believe the solution is blockchain technology. So to understand why, we need to understand two core concepts of blockchain technology. The first one is atomic swap smart contracts. And the second one is security tokens, in which you can program compliance rules. So first, the atomic swap smart contract. This is a contract on the blockchain, a smart contract, in which both parties, so let's say you have a buyer of security tokens, they have stable coins in their wallet, USDC or USDT. On the other side, you have a seller with the actual security tokens in their wallet that represent real estate. Well, through an atomic swap smart contract, they can lock their wallets, and the smart contract will make it impossible for a partial settlement. So what that means is either the transaction must happen totally on both sides, or it cannot happen at all. So there's no counterparty risk. So that makes it possible for peer-to-peer transaction, where you're replacing trust with truth, with code on the blockchain. So that's the first innovation. The second is that within the security tokens themselves, you have a certain amount of characteristics and rules that can be enforced automatically, including some compliance rules, like whether there's a lockup period, which in the US it's a year, for example, a period during which an investor cannot resell. You can have investment minimums or maximums. You can have the necessity of performing KYC and whitelisting a wallet before a transaction can happen. So all of these compliance rules can be built in to the token itself. And so if you add both together and have a blockchain-based venue on which investors can transact, you can disintermediate the transactions and have them at very, very low cost. So no need to involve lawyers to supervise every transaction, escrow bankers, the real estate sponsor themselves, or brokers or others. So that's the key for understanding how blockchain technology can really modernize the private capital markets. In terms of trends, we are observing that, or we have observed for years, that there is an appetite for from retail investors for real estate. So in the U.S., for example, where you have real estate investment trusts in which smaller investors can relatively easily invest in some real estate projects. That's been growing for decades to a point where now almost half of Americans have some kind of exposure for real estate. So to real estate. So that was the first wave of democratization of real estate through REITs. And I can explain, some of the limitations of REITs and their high costs, but that's maybe a topic for another day. So you can pair that with the increased adoption of crypto wallets, and you have an increased pool of potential investors in tokenized real estate that is continuously growing with these two mega trends. So to finish, I'd like to leave you with a thought or a question. As I was preparing for this presentation today, and thinking of the classical technology leapfrogging case study, which is cell phones versus landlines in Africa, I looked at some statistics. And I was wondering if this could be applied to real estate tokenization. So if you look at the telephone industry, maximum adoption of landlines in the US, if we take the US as a proxy for the West, was in 2001, and it was over 90% of households. If we take Nigeria, for example, as a proxy for Africa, just to make things easy, maximum adoption of landlines was only 1% in 2006. If you look at today, cell phones, both Nigeria and the US are above 90%. So Africa as a whole leapfrogged landlines totally to go directly to cell phones. And I was wondering, and this is maybe a question for you as well, be interesting to see what you think, if Africa was possibly going to leapfrog the publicly listed REIT infrastructure, traditional exchanges and traditional brokerage accounts, to directly adopt real estate tokenization, tokenized investments, and crypto wallets, stable coins. So that's, I think, a possibility because the costs are lower. If Africa were to go directly to tokenized infrastructure, you wouldn't have to build this entire system with many intermediaries like we have in the US. And yeah, it's at least something I think is interesting to think about. So that's it on my side. I'm gonna now give the floor to Adam, who's gonna perform a live demonstration.
Thank you so much. And you should be able to see my screen right about now. Let me know if you can see it.
Yep, we can see it.
Great. So this is effectively the platform that the magic happens on. I'm currently logged in as an investor, and I'll slowly make my way towards the administrator. But effectively, our platform allows the real estate developers to list their various different assets, or even other real estate developers' assets on the platform. Effectively, the platform allows the investors to see the image of the offering, the title, who the seller itself is, the attributes of the offering, and a quick investment blurb. If they want, they can also view the details of a given asset. Here we can have a bunch of pictures be present. Again, title and the investment blurb, the investment overview, and additional details. Of course, these can be expanded as needed. This is just a simplified version of an offering for the purposes of an example. So within here, what we also have is downloadable documents, messages, and the investors can also access the loan once they feel like they are ready to perform the investment. And what the investors can at that point do is perform on investment. So they have the number of shares available, price per share, what is the maximum number allowed that one can hold versus their current ownership, the maximum number of shares that they can purchase, and also the minimum number of shares that they can purchase. And once they go through the investment flow, effectively all they need to do is they need to sign a few documents, perform a payment, and once everything is said and done, the shares are transferred over. So the investment of the investors is transferred over to the investors, and very quickly I'll just be able to see the various different payment options that I have here. In this case, I have 1 million, but what I'll do is I'll just jump very quickly over to the administration view, and within here, I can see the assets that I manage. If I go into one of them, I'm going to be able to see the current standings of the offering itself. In this case, I'll just look at the modern office building, and what I'll be able to do is I will be able to see the number of shares. So the total number of shares that are present, the number held by the issuer, the number held by the investors, number of individuals that have invested, number of entities that have invested, the currently pending transactions. In this case, I can see Brian here making multiple purchases and the status of the purchases. And once the purchases are done, they are effectively added to the list of holders. The list of holders effectively just holds the investor's first name, last name, unique ID, class or classes of shares, the values, the quantity, the amount invested, and whether or not voting rights are associated with the holding itself. Besides that, this list can also be used for managing the investors, so managing distributions, as in if the asset itself is rent income generating, the list can be used to know who exactly needs to be paid out and how much, depending on the payout logic itself. And if we want, we can also have another view of the platform itself, and this is specifically for the platform administrators, so the administrators that own and run the platform itself. Here, I can now see every single offering that I have on the platform. Previously, I was logged in as a seller, one that only manages projects, but here I can have an overview of all of the offerings, all 196. And within here, I can edit the settings of the platform, or I can edit the settings of a specific offering of my choice. And what I can also do is I can change the flows. So based on a region and the requirements of the region, I can edit the KYC settings, I can edit the shares, whether or not investors need to be credited or not. So effectively what I'm trying to say is the platform is flexible enough to be able to fit into a specific jurisdiction's requirements.
Okay, Gabriel, so can you hear me?
Yeah, thank you.
All right, so thank you. But can you hear me?
Yes.
Yes, yes.
I think earlier on I heard you say you were going to share what you have so people can continue to read and learn. Is that the case?
Yes, I'm happy to send you the presentation. Yeah.
All right, thank you very much. So we'll expect to have that so that participants are here, they can go ahead, and for all the people that are also joining us online and on air can also join in and get more knowledge from what you are teaching us.
With pleasure.
Right, but thank you very much. Thank you for your time this afternoon. So, ladies and gentlemen, that's the masterclass session of the program. Oh, you want to give them a round of applause?
Okay. Thank you. Thanks, everyone. Take care.
Right, thank you very much. So,
Bye, everyone.
Our next segment is Embracing AI and Machine Learning for the Future of Digital Asset Management. And again, I'm going to have Ben do this moderation. This is a fireside chat. So please help me welcome Ben again, Benjamin Owusu Ansa. Oh, please help me. And then his guest will be Larry Cook, who is a legal counsel, Africa Binance. Is that limited or just Africa Binance? The whole of Africa Binance. Please, a round of applause for him also. because I've started marking time, I'm going to mark. Maybe it's 10 minutes okay for you? Please, do we agree 10 minutes? Or, oh, somebody says, for Ading. So 10 minutes. Thank you very much. The mic is yours. Okay, you have your own.
It's only one. All right.
One.
Thank you very much. Thank you so much. So quick one, since we're going to do a lot of maths and all that. Larry, you know, way back in school, I had this guy who was also called Larry. Now, Larry loves anything about maths. Give Larry anything that has maths in it, and you'll see Larry so happy. So one day we closed from school, and
for their purpose and be able to transact and respond with other digital agents, right, and complete those transactions. That is almost an intersect between AI and, I don't even want to say cryptocurrency, but one higher, say digital assets and blockchain technologies, where you're not just removing the intermediary, but you're ultimately removing point A and point B. Think of Perplex, right? One of the abilities, you can go on, it's like a search engine, you can type in and say, do A, B, C, it will open up your calendar, open up your email, send an address. But then, when you have this AI element attached to it, plus cryptographic technologies and digital asset framework, you could also complete further additional transactions through one command, one prompt. And that is very interesting. In fact, here's a hypothesis. If Satoshi had AI when Bitcoin was first hit the scene, what do you think that prompt would have looked like? And I'll end it off over there.
We'll end it out this way. Thank you so much. Thank you so much, Larry, for making it possible for us to hear. And Larry is still around, so you know it. You can get back to us at any time. Thank you so much.
Thank you.
All right, thank you very much, Ben, as well. Oh, please, you want to give it up for Ben. So he asked you to clap for Larry, and then he leaves himself out. But Larry, do you prefer the lock still, or which one do you still want? All right, so we are going to quickly move on to the next one. Somebody said 5 minutes, so maybe I should restrict to the 5 minutes, because the 10 went into 20. So when we stay at 5, maybe it can go only to 10. And so on that note, I would welcome my next speaker, who is a Chief Executive Officer for Port Solutions. And so I'm sure that you want to really take time, pay attention, and listen to this one. They are creating solutions, African solutions for African problems. He's going to speak on the topic, unlocking inclusive finance, how AI and machine learning, credit scoring can power secure digital financial assets across Africa. Ladies and gentlemen, please help me welcome Solomon Sedinam Abemenya. Please. And Solo, you would have to commit to the time before I give you the mic. So how should I give you? You tell me how many. So we do 10 on tops.
That's fine. Thank you. I think my work has already been done. A lot of the speakers covered all of the things that I intended to speak about. So I'll try and keep it snappy. It's been a long day so far. Good afternoon to everybody, and all protocols observed. Please confirm if my presentation is up, so I could just go straight to the point. But it's exciting. Exciting because some 4 or 5 years ago, before COVID struck, we were not able to have this kind of conversation. As it stands today, we have over $180 billion of transactions running across Africa. That's huge. That's a lot of money. So you could also imagine what we can do with that money in the view of technology. And that's what the purpose of the conversation will be. I'll be focusing on what we are able to do with AI and machine learning, and also how we can be able to use these technologies to be able to do a lot more for our daily lives. Please confirm if you have my presentation up. Right, while we still wait for them. So one exciting thing about Africa for us today is that other speakers have already mentioned that point, that over 70% of Africa's population is below the age of 30. They are not only below the age of 30, they are tech savvy. They understand how to use technology. They're able to make their lives much easier by the use of technology. And another thing that also makes it more exciting is that 70% of the world's mobile money transactions come from Africa. Now, what does that tell us? It tells us that we are already the pace setter when it comes to mobile money. Now, this is something we need to be proud of as Africans. This is something that we have leapfrogged. Most times, thank you. Most of the times, we find ourselves following the band, or we wait for others to set the pace, then we follow. But when it comes to Momo, Africa has set the pace. We deserve an applause for ourselves, don't we think so? Yes. Okay. The other reason why this conversation is very critical for us today in Africa is because our economy or ecosystem is not perfect. It's not entirely structured. So this is the time to take advantage of the fragmentation that exists, of the loopholes, the silos, to create what is possible. We should have this conversation today, now, to ensure that everything that seems informal, typically in Africa today, can be made possible using technology. Not only technology that doesn't work, but one that has been tested, one that is able to make things easier. Now, a lot of us in here today have personal assistants, ones that we did not pay for. ChatGPT. Yes. And it's possible for us to be able to build something that's localized for us. I will skip this because we have spoken about right. I'm happy to say that we, as of today, have come to understand that when we talk digital assets, it's no more only crypto. Some days, probably before today, once we said digital asset, everyone would think about crypto, that crypto is what we're talking about. But today we know that beyond crypto, there are stable coins, there are tokenized assets, there are wallets. All of these things fall under the category of digital assets. And the possibilities are endless. But while there are issues. Fraud still exists. Now people are able to take your identity and do crazy things. You could wake up one morning and see your video on the internet of you being in a police cell. Before you want to save your image, the harm might have already been caused. So fraud is a big issue. Then compliance. Again, most of the speakers have already spoken about compliance. But I believe that the regulators, the gatekeepers of compliance institutions, are doing their very possible best to meet innovation halfway. Because in the absence of compliance, there will be chaos within innovation. So we need compliance no matter what. And again, we have spoken about siloed data, so I wouldn't spend my time on that. We need to be able to consolidate. Consolidation as institutions, as entrepreneurs, innovators, startups, business leaders, is very critical at this point. We cannot continue to build things in silos. Now what happens is that you might have 4, 6, 7 people building the same thing. Why not better put together our resources to build a stronger infrastructure, a stronger foundation that would leapfrog us today into the AI and machine learning world? That is very critical for us to be able to achieve. Talking about what we can do with AI. There are 4 things I want us to focus on when it comes to AI and machine learning. 1, credit scoring. Today, if you don't know what credit scoring is, it is how digital lenders are able to do business with you. For those of you who are able to take money digitally from apps, we are able to use AI to determine whether or not you will pay. We don't need to have your transactional history. We don't need to know how long you've had a mobile money number. We can use AI to detect if we give you money today, will you pay or not? And that is the basis on which you are given a loan. So that's how come sometimes you sign up to an app, you ask for a loan, you don't get it, because the AI has been able to determine, using what we call alternate data, to assess you and determine that Amma will not pay this money if she's given this money. So they deny you that money. Another thing is KYC and compliance. Today, you can sit in the comfort of your homes, download an app, and undergo onboarding using KYC. They take a picture of your ID card, take a liveliness selfie, fast forward, you are signed up, then you can transact. In the past, you'd have to walk into a banking hall or into a microfinance company or institution to actually go through what we call KYC. They'll ask you, where do you stay? You have to draw a map to your house. It's been a long way to this place. Also, is smart portfolio management. I'm able to use AI to help me determine what stock to trade or which area to invest in. That's awesome. In the past, I'd have to pay somebody some money or a retainer on a monthly basis for him or her to be able to teach me whether or not to put my money in corporate stocks or bonds or government bills. But today, AI helps do that easily. Finally, fraud detection. As much as scammers or fraudulent individuals are trying to use AI to take our identities, we have solutions that are able to help identify that this image that's out there is not you. That's where the conversation has gotten to, which is very much important. At Pod, we've done something. We've built an AI credit scoring model to be able to use that to allow microfinance institutions to be able to lend more to the players on the market. What we are saying is that it is not necessary for you to go and spend a lot more money to build what has already been built. And it's possible because we've used alternate data to collect data, over 500 data points. Your geolocation, SMS, call logs, to again determine, would AMA pay that loan? Or maybe AMA cannot pay that loan today. AMA is able to typically use a lot more of your other services to help her build credibility. So based on that, she improves her credit scoring. And credit scoring is not new to the world. It's been long existing outside of this space. So this is not the time for us to crawl towards that process. This is the time for us to catch up, and catch up as fast as we can. So at Pod, a very simple process, KYC, sign up, then you get to know whether or not you have access to a loan or not. And this is possible because of machine learning models and AI technology. To be able to actually press home the magic of AI, we need to do 5 things. 1, open data systems. We've already spoken about the need to collaborate, the need to stop working in silos. We need a strong cybersecurity framework. It's very critical. They said cybersecurity forms the bane of the existence of technology. You know why? As we innovate in the space of technology, that's where those who also have an intent to defraud the system are also innovating. So while we innovate, we need to build stronger cybersecurity frameworks. And also, AI regulation sandboxes, very critical. We are happy about the fact that the BOG in Ghana has been able to set up a sandbox to allow innovation, but we need more. Those who have been there say it still almost feels like they are being stifled to innovate. But the point is, we can applaud the regulator and expect them to do more. With these sandboxes, we can together work, regulator, innovators, startups, business owners, to be able to develop what is possible, bringing policy directives to be able to make it work. So it's very critical that we cannot innovate without having this sandbox available. And also financial APIs for interoperability. Imagine how sweet it has been today, being able to send money from MTN to AT, or from AT to Telecel. That's what we want to be able to do beyond today. Let's be able to add up systems so that if AMA again, forgive me if I call AMA, if AMA again today takes a loan or does business with institution A, that data should be available for institution B to look at, to be able to say that AMA has been good. So based on ABC, I want to continue to transact AMA. That's what we are saying. Interoperability allows us to be able to put data together to be able to serve you and I, the customers. And finally, we need to invest in AI talent. See, Africa has the hugest number of possible talents. Now, I do a lot of business advisory for startups, and when I meet these startup owners, when I see the talent, all they lack is money. We need investment in this space. Very, very, very critical for us. And to be able to do that, we need to be able to go away from algorithm bias, especially if we want to save this conversation. We need to be able to build trust. Now, you cannot build financial institutions or services without trust. It is the bane for which trust is built. Let's also just quickly move on that in 5 years from now, expect 3 things. 1, AI wallets will become financial advisors for the unbanked. 5 years from that would happen. 2, AI will determine not just how you and I get credit, but it will also inform how the digital ecosystem grows. Then finally, Africa will leapfrog traditional financial institutions with embedded AI solutions. I'm happy to say that we are there today, not tomorrow, but now. We will not wait to join others, but we will take the lead in building an infrastructure that is local, be able to meet our needs. Thank you.
Thank you very much, Solu. I'm also happy to say that you still went beyond the 10. But please, do acknowledge him for me. Do acknowledge him for me. One thing is exciting to note, that a speaker that I thought would be keeping very long started laughing when he saw me walk up the stage, knowing that now I've become a whipping the speakers up in line with the time management. So I'm expecting that Prof himself will do us the needful, Prof. But ladies and gentlemen, I'm going to have another one. I think we are all learning, getting lots of data, getting lots of ideas, and reshaping our mindset. Most importantly, we need to reshape how we think and how we go about our business from today and tomorrow. That's why it's important that all of these speakers take their time and take us through the presentations that they have prepared. So kindly indulge us. Next, and maybe we are rounding up very soon, but on my list is the professor to speak about empowering Africa's future, advancing inclusive growth through digital asset literacy. Prof, let me mention your name before you come, but please acknowledge Prof as he walks up stage. Professor Delali Kwesi Dake is the head of Department of ICT Education at University of Education in Winneba. Because he walked up stage before I called him, please clap for him well before I give him the mic. Prof, so Prof, 4 minutes or 10?
5 minutes.
Okay, Prof, thank you.
Thank you so much. I want to stand on all existing protocols and to thank the organizers for this opportunity. I will talk about a very important aspect of our discussion, which is the literacy aspect of digital assets. The literacy aspect, very important. We've talked a lot. Ben mentioned about education, so important in our discussion. But there are different kinds of education. I remember as head of department, I was so excited to invite some blockchain companies to the University of Education Winneba. So I equipped all the students in line from level 100 to 400 that there's this blockchain company coming. You should all come to this particular hall for this important tutorial. They were all happy they came. But the first day, the whole room was packed. The next day, half. The third day, only about 4 people. Because they were so confused. Then I heard the nickname, Mosobo. And I said, what is, so when I pass there, I'll hear Mosobo. When I pass there, I hear Mosobo. Not knowing, they are talking about a smart contract name that they mentioned during the presentation. But they don't remember the name. So all they remember is Mosobo. I said, wow. So it means that there's a lot we have to do when it comes to literacy. It's not just about content. Look, we are gathered here. Most of us here are experts. But there are students among us, and we are using jargon. Crypto, Bitcoin. Someone say, what is that? Digital asset. What is that? We need to find a way to break this down. Now, when we talk about this gathering, I've not heard much about academics. All regulation, Bank of Ghana, but I've not seen curriculum experts from the University of Education Winneba here. I've not seen academics from Legon, from a lot of places, because the gospel have shifted to what? Regulation. If we are not careful and we focus on that, a time will come, the fraud level will continue at the base, because the students will be misinformed. They might not know where to invest and what is digital asset. Even the way we explain these things to them is very important. So it's not just about education, but the right kind of what? Education is so important here. Now, the previous speakers, they have talked about the statistics. I will not bore you with that. Now, when it comes to education, it can be one-on-one education. So I expect a kind of partnership between a lot of companies and the universities or tertiary institutions. They can decide to set up hubs, mini hubs, where students can just walk in to find out, oh, I've heard about this new crypto. They say there's Bitcoin. They say there's this. What does it mean? Does it mean that I should not save in the banks? They might ask those questions. So we should start thinking about policy at the local level, at the university, at the senior high schools, because that is where it begins from. Now, as a head of department, I'll tell you something that happened. Okay, I just want to skip some of the points. Now, as a head of department, I did something very important. I brought 3 blockchain companies to campus. 3 of them. Internet Computer Protocol, I brought them to campus. Sui Ghana, I brought them to campus. IR HQ, I know you've heard about some of them. IR HQ, I brought them to campus. Then, of course, Google, when it comes to AI, I brought them to the University of Education, Winneba. But there's something that happened. When they were gone, the students were more confused. I was so sad. So in class, I asked them, do you remember we learned about this during this summit? They don't remember anything. So, look, this is an intersection of technology and education, not only finance, but the money people. They are looking at regulation, the money. Then tomorrow, there will be scams in the system. Who do you blame? A lot of scams in the system. Then you are saying that, oh, you have shut down this crypto, this thing. You have shut down this digital asset, this thing. But it will continue. So if there are policy experts here, you have to look at, though regulation is very important to prevent certain things, but education, not only education, curriculum experts. You know, there are experts that when you give them a lesson note, they can prepare the lesson note in a format, either video, either animation, or either storytelling, so that the message can go far. That is the danger. So I expect DASA, the next time they should call me that they want to come to the University of Education, Winneba. And when they are coming, they should bring some of the experts along for us to have a discussion. Me, when you call me today, I'll go to the Vice Chancellor tomorrow, write a letter, and make sure that we have a venue. And it can be 1 week kind of interaction between the students and the experts. Imagine we have hubs across all the campuses. You go to Koforidua Polytech, there's a hub there. Legon, there's a hub there. UCC, there's a hub there. A lot of things will change. This digital asset theory that are difficult for students to understand, we will change it at the background. And when we do that, it will resonate to everybody, even to the communities. So please, this discussion is important, but it's just a gathering of experts at the center of Accra. Accra is not Ghana. Ghana is Tamale. Ghana is what? Ho. So let's look at ways that we can bring policies to the local level. I will not take much of your time. I have a message, and I'm sure I've delivered my message, that the next time we are organizing a summit like this, let's find a way to go to the local levels. Let's bring in curriculum experts that can format the content in the way that the students will understand, in the way that the community members will understand, in the way that the chiefs will understand. Because when they accept the technology, I'm sure that the inclusion will increase. Thank you so much, and thank you for coming.
Prof, thank you very much. So please do it again for Prof for me. Prof actually did a minute less than he promised to do. So please. He's the first African to keep his time. Please, you want to do it for him again for me? So do I have Ethel here? You are here. And do I have Maria also here? And now Oh, Maria is here. So once I've mentioned their names, please help me welcome them. We have another fireside chat which is coming up pretty shortly. And then I'm happy that Kwame is back here in the auditorium because we were waiting for him. Oh, please acknowledge them as they come. I thought that I knew your topic. Is it the value of regulatory sandboxes to inform VASP regulation? But I'm not going to allow you to do your own thing. So please, let's make time and hear them. Please, Ethel, the mic is yours. Oh, you have your own. And how many minutes do I give you? Now I can't go more than 10. Do I give you 10? 10 is too much. All right. So ladies and gentlemen, they said 10 is too much. Maybe they will be the second Africans to keep their time. So let's welcome them.
Good afternoon, ladies and gentlemen. You're welcome, Ethel. I'll give you a minute to introduce yourself. And our conversation is on the theme, Are Regulators Fit for Purpose?
I was told this was a panel and that I was going to hide behind a couple of people. And then I get here. I find out that I can't hide. This is a fun topic. And I'm about to start the topic when Kwame walks in. My name is Ethel Kofi. I'm introducing myself. I run a tech consulting firm. I've been in the industry for a long time. I recently had to say to somebody I'm a self-taught policy person. Try to push as much as I can in the tech industry. So yeah, this is who I am.
Thank you. So I think we'll delve right into it. As we all know, the digital asset ecosystem is evolving very rapidly and fast. So on global fragmentation, I would want to find out from you, what are the biggest weaknesses or inconsistencies in global assets regulation today?
You mentioned fragmentation, right? So Africa alone has God knows how many countries. There is some people don't have regulation, some people are highly regulated, some people are in the middle, right? So there's a lot of fragmentation in just in the regulation. So if you're a company that's looking to scale across the continent, that's your biggest barrier. Ghana specifically, I think there has been, Kwame is here, I'm going to be very nice. I think honestly, there's been a lot of work. I think we currently have a governor and a BOG Fintech and Innovation Office that's actually forward thinking, right? And there's a lot of thinking around how do we ensure that we're not doing regulation by banning, because some other countries are doing it that way. So there's actual work and thinking going into it. So I think to be honest, I think Ghana is where it comes to the issues, right? The fragmentation across, but where it comes to Ghana, I think there is actual work to ensure that they are ahead of the issues and there is an understanding of the issues and there is working with the partners on the ground to make sure that we are not regulating by brute force.
Thank you. Digital assets know no borders, but regulation does. I'm curious to find out from you how you think regulators can cooperate more effectively across borders to address crypto's global nature.
I think it start with sort of adopting similar standards, right? So we've got a number of standards that are sort of floating around, and I think I don't want to come at it from an Africa perspective. So I think that if I know there is the fintech passport thing that's happening. If we come at it from that same sort of AU, African Continental Free Trade agreement sort of thinking, which is how do we work towards specific standards we can all adhere to that makes it easier for people to scale across the continent.
Okay, thank you. And then also on arbitration, what do you think about what we can learn from the EU, the US, the Middle East on avoiding regulatory arbitration?
I'll read it because I have thoughts, but I'll just read directly. So the EU has a single passport which avoids fragmentation, right? The US has a litigation-driven oversight, but that's more of a cautionary tale than it is anything else. If you look at the UAE, Dubai, there's a more unified activity-based licensing, which brings clarity. And maybe those are the folks, maybe the EU and the UAE are the ones that we should be learning from. I think ban first, regulate later model, which a lot of our African countries adhere to, it's not going to enable us to do it. We can't regulate by banning. And so there are good examples of people who are doing it well, and maybe not learn from the US, but maybe the UAE and those other countries.
Okay. As much as there are real financial challenges in reality, what do you think a fit for purpose regulation should look like for Africa?
That's a huge question. Okay. Well, balanced, right? So innovation and protection, harmonized across your multiple countries, regional passports, phased, right? So we don't jump in at once, we do it slowly, carefully, data-driven. And look, Ghana, again, we have AFTA, right? I want to go back to the fact that those who don't know what AFTA is, the African Continental Free Trade Agreement. And the idea there is to create freedom of movement of persons and jobs and that sort of thing. And Ghana is, and the rules around digital, I think the rules around digital and how do we ensure free movement across the continent. I think that if we can hinge on that there's already this movement for regional movements to harmonize and to work across the continent, then we can build, we can build ecosystems that better support the ecosystem. Ghana needs to do a bit more around consumer protection rules. The ones that, I think in my mind, that mirror maybe the MOMO frameworks. So clear disclosure, dispute resolution, transaction reversals. I think there's a lot that we've learned from MOMO and doing MOMO. I think there are lessons there that we can carry across.
Just to wrap up, my last question for you is, what's the one thing regulators should do today to become future ready for digital assets?
Talk to the companies that are building, talk to the builders, have them in the room. Policy, I think we're doing it much better here than most people are. you have to do policy while listening to the people who are actually out there building. And I think that's the most effective path for sort of collaborative partnership in policy, is have people in the room talk to the people in the room, understand their perspective, and let's shape the policy together.
Thank you very much,
Thank
Ethel.
you.
This has been a very
That was less
insightful
painful than I
conversation.
thought it would be.
So Ethel and Maria, ladies and gentlemen, please, a round of applause for them. Thank you very much for your time. And now the final session for the day. Thank you very much. I've seen a lot of people look at their time. This won't take long. Kwame has been up already, and he's going to come back to answer a few questions on how, as a regulatory body, the sandboxes can be used in the entire space, eco-space, regulation space. And so Jill Sherman is going to do this one. Please, ladies and gentlemen, for the final time, let's welcome Jill as she walks up stage to host Kwame. And then, of course, Kwame is from the Bank of Ghana, ladies and gentlemen. This is a fireside chat. I don't think we'll waste a lot of time, or would spend, let me use the word spend, a lot of time again. But thank you for your patience. This is the final battle. The battle is still the Lord's. So, Jill, the mic is yours.
Thank you. Thank you. First, thank you so much for giving me this microphone. That works so well. I think everyone can hear me. I hope everyone's awake, right? Because Mr. Opong is a very busy man. We know that, given how much he's been referenced today. And it's both a privilege and I think telling that he has returned and come back to give us this final session. So I'll briefly introduce myself. We don't want to spend too much time on that because we're really here to cover the content and hear this gentleman speak. But my name is Jill Lagos Jemin, and I'm the head of policy for a company called Mtech. And we have a very close relationship with the Division of Fintech and Innovation at the Bank of Ghana because we are the technical provider to the regulatory sandbox. So it is said with full disclosure that, and it is not surprising that this is a topic very, very close to my professional heart. So, Mr. Opong, we don't need an introduction from Mr. Opong, right? We know who he is. What I'd like to start with is, before we talk more specifically about sandboxes and virtual asset service providers, I'd love for you to give just a brief description of the Bank of Ghana's innovation sandbox that you operate today, and feel free to brag a little bit about what sets it apart and why it's not just continental leading in Africa, it really is world leading.
Well, thank you very much. I think often, look, maybe let me start with giving a bit of my background to give this context. So I come from private sector. Some of you may remember me from there. Then also been in the policy space, and then joined a central bank. One of the unique things that I noted is that structures of central banks are designed to save you and I from poor and risky decisions. This is very important. Governance is something you don't play with. So when a law is written with the expectation to regulate a space such as mobile money, or to regulate the emerging fintech space, whether directly or indirectly, depending on which point in time you're looking at, you have to anticipate that that law, as forward-looking as you may attempt to design it, and I know there are, well, not as many anymore, but there were some faces in this room that were part of writing the EMI guidelines and the rest. That law would need to have a certain level of agility in order to be relevant for an extended period. Try as you may, you will still encounter brilliant innovations that may not fit into the structures that the law permits you to be able to govern or regulate the space. One of the key tools, frankly, the primary tool you can use to support that kind of ecosystem development is a sandbox. Now, many people have heard of sandboxes, and I think when you ask everyone about a sandbox, they're going to give you their own response. But what Bank of Ghana built was a regulatory sandbox. Effectively, it's not a sandbox at a hub where you go in there and keep, testing ideas and getting creative. There's a place for that. That's not what we do. We're not an innovation hub. My role is twofold: the police and the cheerleader. Both of them equally important. The regulatory sandbox is a place that you come to get a regulatory comment, a yes or a no, on a product innovation or commercial model that is innovative. I've actually been one of those who, on the other side in private sector, came up with a product, and for over 6 months, the central bank couldn't quite tell what to do with me. I kept going in and out and in and out. My bankers are now, in fact, my deputy now, just interesting turn of events, was actually part of this whole process. And so it has stuck with me in the sense that here is a well-intentioned central bank that couldn't find the tools in order to bypass, to accommodate what we wanted to do. I don't want to mention what that product is, but today is one of the most lucrative businesses. And this product is from 2014. In fact, there are so many people around this ecosystem who were involved in that product. And so having a regulatory sandbox has one primary goal: to be able to give a regulatory verdict to your product. With that being said, we also had to look at the fact that many of the products we look at today are not single-dimensional. Today, really, if you come to my office and, I have an innovation, what is it? It's P2P. You lost me right there. Believe it or not, people come and they bring merchant payments and they are guarded about it. Look, I respect the sentimental value of it. Innovators are creators. Creatives are emotionally attached to their innovation and their creative content. But the truly innovative products are actually not single-dimensional. Sometimes, so you saw SEC this morning, him and I, the Deputy Director General, we literally have to work with each other, whether it was crowdfunding, digital assets, many products that we have to be able to enable, they may straddle two regulators. How do you make sure that you can evaluate products in a way that can also alleviate the burden for the innovators, so that you don't come to us, go here, go there? I've lived that pain. And so our sandbox from the beginning, we said we have to get a multi-tenant sandbox, something that already exists in technology. Instead of building multi-tenant systems back in the 2009s and 10s, right? These systems have been there. We're not the ones to create that from a technology standpoint, but from its application, from a regulatory standpoint, it was the first time we were saying, SEC, NIC, MPR, everyone else, you're welcome to join us in here. So that when someone brings a product targeted at the agricultural, rural agricultural sector, with all its dimensions, insurance, pensions, and small savings in there, and payments, we can all evaluate it together. We look out for what is of interest to us. We make a call on it so that they can have an easy process in going through. Let's face it, we live in Ghana. Until recently, we didn't even have a biometric ID card. That was a national ID card as we do today, right? India had Aadhaar. You saw how it transformed. And now we're able to build on many of these digital public infrastructure. We have come a long way, but we needed to have a sandbox that had that capability. Secondly, we're a traditional institution. It's not easy to change traditional institutions. We've been there, except GCB, who's our parent company, as he likes to laugh at us. GCB staff were actually lined up. 1, 2, 1, 2, 1, 2, everyone picks a number, half went here, half went there. That's how Bank of Ghana was staffed, for those of you who don't know. So they consider themselves a parent company. But we're an old institution. That means all the key functions may have their mandates grounded in very conservative principles and rules. There are some departments, for instance, in central banks, whose mandate is not a function of a governor's opinion, is written in the Bank of Ghana Act. But that also means when you bring products and we have to evaluate different dimensions of it, those dimensions involve those functions. So how do we make sure we bring our traditional institutions, who, by the way, traditional functions, who, by the way, have deep expertise in these areas, but may not be as agile, into environments like the sandbox? Is it painful? Absolutely. That pain, we keep it in-house. We don't come and say it outside. But this is what I learned over the period. When you have a sandbox that is easy, intuitive, designed around the process, the internal process of a central bank in making product decisions, when you can invest in capacity building for the respective stakeholders internally, you are well on your way to have an effective sandbox process, and you need a stable, robust, and scalable sandbox infrastructure as well to enable it. Our platform provider has been very patient. Everything you guys come to us and say, but why can't we have this? Why can't we have that? We just call them and say, hey, please, is there any, I know they're probably tired of us, but is there any way you can change this for us? Is there any way you can change this for us as well? Look, we're building an ecosystem of the future. This morning I highlighted a lot. But what I want to highlight to all of you is that we are going from a place of known to unknown. And the known elements are the traditional principles that govern the financial sector, and we have to be able to adapt it to this new emerging space. Because all of us in here are excited about digital financial service. But I can tell you what, when you go to the port, what do they care about? None of this. When you go to the market, what do they care about? None of it. When you go to rural areas, do they even understand that? They don't. So you have a huge segment of our population who don't necessarily share your enthusiasm. And for us as a regulator, ours is to nurture your enthusiasm and give them confidence. And the only way we can do that, sometimes when it comes to what may be perceived as dangerous, is to have tools like a sandbox with which we can test products and new innovation and new commercial models, establish what it is and what it's not, make a sound regulatory judgment on it, so that as you proceed with your innovation, they can also be comforted that we are not letting people into the whole system to come and destroy their financial and economic lives. Thank you very much.
I'd like to build on a couple things that you said. One is that I could not agree more that the true innovations are really multifaceted. I also believe that is exceptionally true for virtual assets. And the products that they lend themselves to and can create are truly multifaceted. This is also a reason why I believe, one reason we're up here today, is that sandboxes are a not just special, but possibly critical tool for both regulators and for virtual asset service providers themselves. You had just said, you talked about trust. He's not the first person to talk about trust, by the way. Certainly not the first central banker to talk about trust. And I would argue that sandboxes are an important tool to help regulators develop trust in these new products and services. I would love to hear from you some unique aspects or features of a digital regulatory sandbox for virtual asset service providers. What they're providing to regulators to inform a new regulatory framework, all the things that you just talked about, to allow regulators to understand the unknown together with the known principles.
Well, thank you. And this trust issue, I've always highlighted it. It's a central bank. We have one primary currency, trust. That's it. And if you're in this sector as well, if you're a bank, if you're a fintech, mobile money provider, that one currency you have is trust. When trust depletes, you don't have a business, at least not in the long term. So the trust element in sandboxes, especially in the digital asset space, is at various levels. One of the levels is that for us, we can assure our internal governance process, from the board to our broader stakeholders to our internal staff. Because remember, as I'm excited doing fintech and innovation, somebody's responsibility is consumer protection. Someone's responsibility is anti-money laundering. right? So if my guy is going to involve in money laundering activities, now he's going to be having sleepless nights. These are all important aspects of the work. So a sandbox being transparent and with all the elements designed and incorporated in there gives trust to your internal stakeholders. Then for the external stakeholders as well, for the primary reason that you have decided to lean in and put out there a sandbox, you've basically extended a hand to meet them halfway. If for nothing at all, this is how we have seen the most rabid of enemies even build a bridge towards each other. It's a bridge to reach out to the ecosystem out there. But even more so when it comes to interaction. You know, people perceive things as dangerous when they don't understand it. There are many things that I would come out. My job is to take the position of the central bank. And I, unfortunately, before joining, I was out there somewhere talking about how digital assets and cryptocurrency is the future. I didn't know I'd go to the central bank. I would have been cautious what I say where. But eventually, when I found myself in the central bank, I had to be cautious what I say, right? And I say this to say, until we actually started internally testing innovations in a sandbox, many of our internal stakeholders did not appreciate many of the innovations that were out there. Period. But the moment after the first product, second product, third product, I give a case where one sandbox committee was seeking approval, a sandbox committee meeting was one of the longest days I had had. I literally had run out of steam. In fact, I was standing. It was a remote call. I think it was during COVID or something. So I was standing on my desk and speaking, but I had zero energy. Now, here are two of the most conservative directors in the bank, not only defending the applicants and their product, but suggesting support that we can also lend to them. It came from a long period of one-on-ones, helping bridge that gap, helping them understand. You go back again and like, Kwame, that your thing you said is a what again? You start from scratch. It is painful work. But if anyone will confuse you to delude you into believing that somehow you jump from 0 to 100, it doesn't happen anywhere, not in public institutions, not in mine, nowhere else. And I can assure you, I'm part of enough multilateral agency groupings and the rest to tell you it is not just the case in Ghana. Singapore introduces me to their Fintech Association, and you get the same earful. Kenya, the US, frankly, ask any regulator. It is a common refrain, and so they are used to it, by the way. Regulators are not into a popularity context. They are usually the only ones with a mandate, so they don't mind. But they recognize the fact that it's not a popularity contest, and the day they forget that, a sector comes down now, they are personally liable and may even go to jail, by the way. And so, online pirates and the rest, not really a big deal for them. But I'll give you an example about this trust issue. You would notice the European banking community is very suspicious of central bank digital currencies. Something that is obvious, something that is straightforward, something that has so much promise, even for financial inclusion. The reason isn't because they don't understand the technology, because they are issuing, tokenized deposits. They have the capabilities. But do they trust their regulators fully is where the real issue comes in. And consistently, when I engage these bank MDs at the European bank MDs at various fora, I begin to detect that a bit. So to give you some context, the American approach to regulating new innovation has been, let's watch and see. And then a few lawsuits here and there, and then they would know where to go. But they still try to enforce the base principles, right? Whether it's AML principles, the basic travel rules for cross-border transactions, etc. They'll enforce that. And at a certain point, when they have some level of comfort, regulation will come out. As it stands right now, the CFTC, the SEC, and sometimes even the control of currency all have some role to play in regulating digital assets. But even more interestingly is sometimes the arbitrage between SEC and the CFTC about who's responsible for regulating digital assets. Even in the United States of America, it wasn't clear for a long time. I think now we're seeing things settle. The European approach has typically been, we see this new idea. Let's anticipate what is capable of being over the long term and put rules in place for it, governing it all. Then you might not even know which direction it's going to go. Many of you don't know the story of mobile money in Ghana, but if you go and read some articles, you'd actually find out the near-death experiences that happened around mobile money before it eventually got where it got to. This market was almost they call it, well, it was a non-wallet market, right?
A runaway market.
Yeah, it was actually,
there.
it actually almost a risky failure because, mobile money started with high expectation, dipped very badly, and then was successful. These realities are not as known, but that is one of the reasons why, had the regulation been like the European rules, it could potentially have stifled the future development of mobile money. Because we thought it would go here, then it went there. Another example. So if anyone thinks it's an exact science, it is not. Or at least you can hypothesize so from the comfort of not having that responsibility. What matters the most is to the issue of trust again. If you can have a shared partnership with your stakeholders, and kudos to those quiet individuals and businesses who worked with us over the last 3 years without coming out one day to post a single thing online, that they had been working with us every Tuesday and Thursday consistently. 47 revisions of digital asset rules. Yes, 47 revisions. Sometimes it seems like, yes, we're right there. It looks at it and like, okay, let's give it some time. Let's go back again. All those entities, that was an example of a quiet, self-selected partnership for them to work with us in evolving policy. At some point, we brought in the tent, and on the day we had to go and discuss this with industry, it was beautiful to see the different views being captured. Not every one of you were in there, I'm sure, and that's okay, but at least we posted it online, so if you had the opportunity or you had the time, you could have made a comment as well. That kind of interaction is what builds a forward-thinking regulation. And that kind of forward-thinking regulation also comes from being in the right technology environment, having the right tools to support the work that you're doing. So in our digital asset sandbox, we had our sandbox, and then there's a digital asset module in there as well, which is going to now give us the ability not just to onboard these entities, but has the right APIs. You can imagine your mobile money APIs is not the same as the APIs you have to use for evaluating or helping integrate these virtual asset providers. Because think of virtual assets as rewriting, frankly, the whole Web3 is rewriting the economic modules as we know it. So you have those who are interested in just normal exchange platforms, those who are trying to do cross-border payment, those who are trying to do in-country payments and merchant payments, peer-to-peer transactions, all the different DeFi elements. How do you truly capture all of this within a sandbox environment? That's what the sandbox today allows us to do. And the tools in there, and even the customizations of it, have been born out of our interaction with industry stakeholders, those who are actually building things. How many of you have built anything on the block, any projects on the blockchain? Just show by hand. Okay. Well, why are you? Okay. That makes, so some of you may be aware, 2022 somewhere, I actually took my staff. So full disclosure, I used to build things. I don't do that again because I'm a regulator. I don't want them to think I'm up to trouble. But we actually trained people within the central bank on how to even issue tokens. But industry would never know that because we cannot be talking about that before you think we are trying to, be up to something else. But we're purposefully quiet about it because we are a central bank. We are regulators. We don't make noise out there. But when we extend a hand of partnership, those who meet us halfway have been part of shaping policy. And today, we're about to explore a sandbox cohort in this digital asset space. It will do two things for us, not just allow you to test your product, but for us as well. For people who perhaps are in different functions within the bank, they are going to be able to understand how things work, experience it for themselves, and practically understand what it means and what it takes to supervise the space. This is what you need, by the way. Because remember, if we're too ambitious and unprepared and jump ahead and maybe 2-3 years ago said, you know what, digital asset is happening anyway, let's just let it go. Would have woken up one day and would have been down with FTX. When you ask us, what are we going to say to you? So we have to be responsible with these processes. The tools that we're leveraging right now are quite efficient, they are quite dynamic, they are robust, they are resilient, and for me, what's most important, it gives us that ability to collaborate. In the way that we're collaborating with FIC and SEC, I can assure you it's not happening in most countries like that. We've been asked, how is it that you're able to work amongst yourselves like that? I don't know what the answer is, to be honest. Maybe because we form easy bonds and friendships amongst ourselves across the various regulators, but it also helps that we have binding technologies that we all understand and service providers who've helped us understand each other in a way that we're all comfortable with supporting a common process that will ultimately make your lives, your ambitions, and your innovations come to life. Thank you.
So I've learned a few new things here. I've learned that Mr. Opong is a builder, is a policeman, and is a cheerleader. These are certainly innovations I did not know of. I see we are getting signaled. It is such a pleasure to talk to you about this, and a true pleasure, I think I speak on behalf of the audience, to hear you share really how the Bank of Ghana is taking that role that you described of, you say policeman, I'm going to say trust builder and cheerleader, which I will also translate to a shepherd of innovation. You really want to shepherd safe innovation to the market to maintain and build that trust with consumers and other market participants. And using the sandbox as a tool to do that, we are so pleased that that is working for you, but not just for you, also really working for the sector as well, welcoming virtual asset service providers into the sandbox such that they have a native digital opportunity to educate regulators on the performance and actions and activities of their business models. It's such a tangible way to be able to do all those things that you described so well.
Yeah, and let me just have a shameless plug. So please, Ebenezer, raise your hand. That's another person who's been helping us in the past. Probably nobody talks about that, but he's been part of giving us input. I saw a couple of people earlier, I can't see quite far, but I would ask that DASA, with the work you're doing, I will encourage you to particularly support on one key level, capacity building. After we are done with all of this, we have police, we have the judiciary, we have so many of our stakeholders, even the accounting community. ICAC, Robert was here, the Chartered Institute of Bankers. We have an obligation to support. And to be fair, MTech, some of you have had the opportunity to attend MTech events. Sometimes it's in partnership with us, sometimes by themselves. This thing, it takes a village. We have to come together. We have to continue to collaborate to build capacity, safeguard this. This is our next big opportunity to leapfrog economically, technologically, and frankly, we have a youth and a not so young population who can transform Africa's, our prospects in a way that we couldn't have imagined just even 5 years ago. So thank you very much for putting this together. It's been a pleasure engaging all of you, and I look forward to collaborating with you in future. Thank you.
Thank you.
Oh, a better round of applause for Kwame. And when he went away, there are lots of people who felt he wasn't going to come back, but he actually did come back. Please, another round of applause for him. And then Jim, thank you too for your excellence in moderation. Thank you also very much. Please, a final round of applause for the two of them. And now, as we will have it, this brings us to the end of today's session of the program. I can promise you that you don't want to miss out on tomorrow. And tomorrow, it is not Kofi Annan International Peacekeeping Center. It is Kofi Annan ICT Center. Please tell a friend, to tell a friend, to tell a friend that all the experiences you've had today and the engagements you've had today, we are going to double it up tomorrow. We're going to speed up tomorrow. And it is going to be a bit more detailed tomorrow. So tomorrow, you bring your pen, you bring your paper, you bring your notepad, you bring your tablet. You're coming in to take notes, you're coming in to learn, and you're coming in to take something home. Especially for the builders, for those of you who want to get into building. I don't mean artificial construction, but when we talk about building in this room, we talk about technology. And so, ladies and gentlemen, I think the day is fast spent. All of us are virtually tired. There is food prepared outside for you anyway. But let's welcome Mr. Frimpong, who is going to round us up and give us, I don't want to say the closing prayer, but the final words of the day. He is the convener. Oh, clap for the convener, who is making sure that you have all of this knowledge between today and tomorrow. So, ladies, I have the mic. Please do it well for him so I can. Your final words for us.
What can I say? Thank you very much, Kwesi. I appreciate you so much. All of you for your time. I think we've had a brilliant day, haven't we? Let's give ourselves a huge round of applause. And Kwame, what can I say? For you to come here earlier, go back to the office, come back again, it tells me how this project means to you. And it is our fervent hope that Bank of Ghana would support us as we take this project forward. This, I mean, is just the beginning, and there's a lot yet to come. We've had a lot of people coming to us trying to be part of this project. And I believe when we come back to you next time, we'll receive the possible favorable response we deserve. Thank you very much. Thank you so much. So I hope that we are not going to repeat today's experience tomorrow, which is that we came very late. I do appreciate that the Kofi Annan thing did confuse most people. There is Kofi Annan Peacekeeping Center, which is in Teshi area, and then this one, which is Ghana, India, Kofi Annan Center of Excellence for ICT. And which better place could we have had this event other than ICT Center here? And I want to thank all of you, the media guys, all of you behind the speakers. Joe, you were amazing. Your questions were surgical, succinct, and straight to the point. And Kwame also did do justice to it. So let's give it up for them again. Let's give it up for them again. So I won't take much of your time. Tomorrow morning, we'll congregate in here as early as we can. Please, 8:30. We are going to be hearing from the Ghana's ambassador to United Nations. He's taking a different, not a different topic, but very interesting dimension to it. He's going to be speaking to us about digital assets and its impact on Africans' burgeoning market. I mean, he came up with this topic, and I think that's too dear to his heart. And let's come early to listen to him. The Ghana Association of Banks CEO, John Ewua, would also be here to speak. So many of them. I can't even mention all of them. MTech CEO, Kamel Cadet is going to be having a fireside chat. There's a lot built up for it. And there would be a session by Professor Tonya on a workshop on licensing readiness, VASP licensing readiness also. That's also going to be a very, very interesting one. As you know, she's a professor in teaching, and when it comes to teaching, no one can challenge her. So I thank you. There's more food outside there, and tomorrow we'll be having a networking event just after the main event. So please do go home, get yourself prepared, and come back tomorrow morning. Thank you, and may God bless you all. Thank you.
All right, so we're duly dispersed. Thank you all very much for participating in today's event. We do hope to have you tomorrow. Thank you.